guys, it's Nolan. It's Tuesday, 31st of January 2023. So end of the month already, month end. We can sometimes see some odd movements, if you like, on month end. But also this week, there's quite a bit of news going on. And it's a big news week. Today, CAD news, GDP, USD news at 3 o'clock p.m. GMT. Consumer confidence, Kiwi news a little bit later on tonight, employment change, but big news is probably going to be this FOMC statement at 7 p.m. GMT on Wednesday. Then we've got Thursday, the Bank of England monetary policy report. Then not long after that from Europe, we've got the main refinancing rate from the ECB. And then, of course, on Friday, because it's a new month, we've got non-farm payroll. So, yeah, a lot going on. And, you'd be forgiven if you didn't want to trade at all this week. The point of trading is to make money, or to make more money than you lose, actually, because you're always going to lose money. There's no doubt about that. But the trick is to make more money than you lose. And to me, trading when you got these big news announcements adds a little bit more extra risk. It doesn't mean you can't do it if you're experienced and you have a good strategy. But if you're less experienced and maybe new to trading, then probably this week is a week you'd want to stay out of the markets. And if you do get into the markets, really you want to be in and out. For instance, you probably wouldn't want to be trading any USD pairs on Wednesday, and you wouldn't want to be trading any GBP and Euro pairs around this news announcement on Thursday, etc., etc. So be sensible. If you're going to trade, you can also trade at reduced risk as well. You don't have to go at your normal 1% or whatever your normal risk is. You can go 0.25, 0.5%. Just take that risk down a little bit lower when you've got all of this news coming out. So, anyway, let's have a little look at what's going on. And today we've actually seen, this is the weekly time frame, as you can see on the dollar index. Today we've actually broken last week's high. Okay, so we've come into some weekly support here and we've broken last week's high. We saw some big momentum. I'm going to put some lines on this just to give you an idea. 101.50, okay, 101.50 was where we were finding weekly support. Got some big momentum down into the level, then it slowed down. Look at the what's called the real body here. It slowed down. The open and close, a much smaller range, much different to this candle here. And then last week's candle, an even smaller range and a smaller candle in general, telling us that momentum of the sellers was dying out. So this candle doesn't surprise me. I was talking about this with some traders yesterday, and I said, to look for a break of this weekly high, because that would potentially mean that we are seeing a correction now. Doesn't mean we're going to have a huge move to the upside. What's said at tomorrow at the FOMC will obviously affect this chart, but yeah, to me, potentially, another move back towards the tip of this week here, and we could go back to 103.50. And the only reason I say that is because it was a nice little area of support here, and we broke it and closed below, but we didn't actually retest it. So we might see, a spike up like this, maybe into 103.50. Now I would set alerts at 103.50. I'm actually going to do it now. And I'm going to put resistance, because often broken support becomes new resistance. Not always, but yeah, often. And the momentum, like I said, the bigger momentum is to the downside. So any upside on the dollar index, I'd be looking at as a correction until proven otherwise. So yeah, I'll be looking for a strong USD to carry on potentially and up into 103.50. Then I would be looking for sellers to come in and take it back down to 101.50, and then we see what happens. Do we bounce again, or do we break through? So today, we're seeing that dollar strength in the market. So Aussie USD, which was actually came into weekly resistance, as you can see here, we've seen price turn around. It's selling off this morning. You can see that momentum change. Look, as we come into the level. This was a lovely candle, actually, if you caught this. This was an inside candle, doji candle at resistance. You can see that big momentum going into the level, then boom. That smaller candle, that doji candle, that change in sentiment as we see those those buyers leave the market and sellers come in, and then boom, we get a big seller candle yesterday. We have an evening star pattern here. And yeah, and the rest is kind of history, as you say. That dollar strength's coming in. We're seeing Aussie sell off against the dollar. So yeah, that was a nice setup there. But that was Friday. Yeah, Friday's candle, I believe. So sell stop underneath that candle, stop above the high, and you would have got some nice pips off that. Again, it's just being able to read price action and reading price action at certain levels. So, a doji candle like that at resistance or at support can often be a reversal candle. So that's around 1.28 to 1 up at the moment if you took that. So, we might, be able to look to trade this intraday. No, we're going to put this on. Yeah, there we go. So this is the H1 time frame. As you can see, we see that change momentum, which we saw on the daily. And, look for a pullback. So these moving averages are the 50, the 50, the 20, and the 8 exponential moving average. Normally, I like to see a pullback into the 20 and then a resumption of the trend. So for me, I'd like to see a bit more of a bigger pullback. At the moment, it's just really bouncing off the 8 moving average, as you can see. So I'd say maybe that might come into 70-20. And then reverse again. But my style of trading is I like to see that pullback into the 20 moving average. Then I want to see the trade resume. I want to see the direction resume. So I'd like to see, at the moment, the 20 moving average, it's around about, it's just above 70-40. I'd like to see a little bit more of an hourly pullback into that 20 moving average. Then I want to see a reversal. I want to see an evening star pattern or something to tell me that the sellers are coming back into the market, and then I would potentially look to take a trade. Okay, potentially. So yeah, I mean, what else we got? What's happening with euros? I would say the Aussie chart is a bit neater than the euro chart, but we've still got the same thing. We've got those buyers turning into sellers. There's a really nice level here, actually, isn't there? 1.0840. Just taking the moving averages off for a second, you can see that level of support there and support there. Look, it would be nice if we came back into 108.40 and rejected and saw an evening star pattern there, or a rejection candle, bearish engulfing candle, something like that. So that might be a level to look out for as well. But yeah, it's a day of dollar strength, and gold has had a really decent move overnight. I'd be a bit worried about going short on this now. I would be much rather looking for a bit of a pullback on this. So yesterday, I was looking at this range playing out between 1921 and 1934 with an intermediate resistance of 1930.5. You can see price bouncing up and down. We did come into 1934, come back down into 1921, move back up to 1930.5. And really, I was hoping price would come back into 1934, and I was looking to sell from there, but it didn't happen. And it's overnight, as you can see. The early hours of the morning, 4 o'clock, 5 o'clock in the morning, GMT, we broke through, and it's literally just fallen through now. So I'd be a bit dubious, like I say, about getting short on this now. That's some kind of a pullback, a correction pattern, something. I'd be a bit scared with getting into a trade, I don't think it would be sensible right at this moment. There's our trend line. So, you know, if we could see something, you know, if we did see a little correction pattern, something like that, and then we can look for the next move down. Okay, so Aussie USD looks a bit nicer to trade than gold. Gold's obviously had a very impulsive move, and I'd be a bit worried about getting involved right now. So have a look at the other USD pairs as well. You should all pretty much be showing the same thing. Let's have a look. Pound USD. Let's put our moving averages back on again. Yep, you can see those moving averages have all crossed over now. So 123.40 could be interesting for pound USD. So have a little look at them. It's a day of the dollar, day of dollar strength. So don't obviously fight against that. Just look for a pullback. Look for something that meets your rules, and then look to get involved if you want to. Keep your eye on the news events that's coming out, because you don't want to be trading anywhere close to a high impact news event. And yeah, like I said at the beginning of the video, you might want to trade at slightly low risk than normal, just on the safe side, because, you know, capital preservation is what we are aiming for. Obviously, we're aiming to make money, but we're obviously looking to not lose money, or not lose too much money in the markets. And just with that news coming out, just think about lowering your risk. So that's it from me, guys, and we'll see you in the next video. Listen, take care, trade safe, trade sensible, and if you don't trade at all this week, it's not a big deal. All right, see you later. Bye.